Welcome to everybody joining in to the opening bell here this morning. It's exactly 9 a.m. It's the 11th of March, ladies and gentlemen. Very interesting here, man. We have the CPI coming up. But before we get started, remember the information we discuss in this video is opinion and should not be construed as advice in any way. Jules, good morning to you. Am I audible over there, Jules? Maybe let me know in the chat facility. Is all well there on your side? Well, I hope you guys can hear me now. Big apologies. I hope you guys can hear me now. I hope you guys can hear now. Just give me a couple of seconds there. It's possibly just a technical glitch. Let me know. Let me know. Let me know. Let me know. All right. There we go. Yes. So so today's going to be interesting. We're going to see what happens with the CPI print, guys. We had mentioned that. There we go. Thank you, guys. We had mentioned that it's going to be interesting because Trump has already made mention of the landmines in the Strait. We know that the Supreme Leader's son had taken over, and it's disappointing to Trump. He says that there will obviously be consequences should there be any issues there with the landmines. If they're trying to block the strait, there will be war. And so, guys, let's be honest here, all right? With the CPI print coming out now, yes, 98,000 jobs were lost, but the CPI print can still come out extremely strong today. If energy prices stayed up, which we saw, if I go to oil here, we can see that right there is where Monday came in, and we had the $114 per barrel, but the same day we came down dramatically to 79. So it doesn't necessarily mean that the spending went up, because that only lasted for a couple of hours. 1, 2, 3, 4, 5, 6, 7 hours of Monday, and then it started coming down dramatically. All right. So due to that, the spending could have eased and we could get a weaker CPI print here, today. What's going to be interesting, I must be honest, what's going to be interesting to see for that 7 hour movement to the upside, 7, 8 hour movement, because obviously here we kind of have to count this in here because prices were still over the $100 per barrel. So it came down right there, 99. So from there, the entire time that price was up and corrected, there could have been a lot of, CPI inclusions over there, and that could influence the print today. So it's very, very technical today. It's very, very technical today. We are anticipating, based on what has happened with the 98,000 jobs, the logical mathematical equation is fewer jobs, less spending. But again, if the main items, the items that require a lot of spending, like energy, all right, in the form of electricity, even rent, if that stayed high and people paid that price, then obviously we're still going to see a higher print here today. But it's going to be interesting. We're going to be looking at the Euro USD. It has come up and recovered from last week's NFP. You can see it's at that resistance. So if we get a weaker dollar, we obviously are ascending and going, climbing back up. USD JPY coming down to the 1.7 is what we're going to be looking for, and going even further down, possibly to the 1.56. That's today, if we do get a weaker dollar. And then the gold and the silver, I just said to the guys now before, you guys were so quick to let me know about the sound. Thank you very much. This is a little bit different because the gold and the silver is reacting more to the geopolitical sentiment, not so much the CPI here today, even although they are highly integrated and you can get some correlations between the two, but more so the gold is obviously, and the silver is considered the safe havens here right now because of the political uncertainty that's happening. So investors are rushing to that. So we might see, gold push up. It's already at a resistance. We've already hit a correction here. And this correction could stem and push down and extend further down to 85 on the silver. And then later on, we push back up again. That could happen still today. Even the gold price, we could be pushing down one more time to about 5148, where you see that massive spike over there. That massive spike there, we might just go and correct it before the CPI, and then later on we push up to 5371. So please be geared today. Watch the oil price as well. If we do get a weaker dollar, guys, we're going to see the oil price coming down again. We could go as low as 73. That's an absolute possibility. We could go low as 73 today, and then later on push up again. All right. And then obviously in other news there, BTC, guys, the Bitcoin price, we jumped a little bit to the 70,000 US dollars, but you can see that, Bitcoin is still, that obviously has a much higher share than any other crypto in the market, in the cryptocurrency market. We've not seen significant support, illustrated yet. Yes, we're seeing some pattern development and so forth, but as far as us looking at it from a if it's going to rise at this point in time, no, we can't say that for certain. All right, in this specific case, we are still seeing some movement to the downside. It has touched the year 2024, the high, and as well as the year 2021. So we're going to wait and see where the Bitcoin price is. All right. And obviously, when you're looking at it from what's happening at this point in time, the crypto market is not so much affected directly as the commodity, as the FX at this point in time, because the trade that is going through the strait is affecting assets that have been backed for many years, more than the cryptocurrency market. So the strong fundamentals that is happening on the FX side and the commodity side, because the manufacturing that's taking place, the companies that depend on semiconductors, so companies like Intel, you're looking at Nvidia, all these guys, they are depending on a lot of manufacturing at this point. And with the strait still being blocked, or at least being uncertain at this point, we have to wait and see. All right. And then just one last thing before we go, guys. Please remember that, even although we have a lot of things happening with regards to the strait, please remember, guys, that the markets must go on. So what the G7 has done is they have come together as a group of countries, and they have said that they would compensate with their reserves between 3 and 400 million barrels of oil. They will give those reserves into the oil market if there's if the instability continues from Iran's side. And so, with that being said, with that injection into the oil market, the supply will obviously go up, which means the demand will go down. That means prices come down. But that has not been done as yet. I've not seen anything as yet that the injection has happened, because we know that there's been talks in Iran, but it's now escalated again since yesterday or the day before. There's been, I believe it's yesterday, they escalated it, talking about the landmines that were placed at the strait. And, it's really, really just a lot of politics at this point in time. But if that injection comes, we're going to see some, price push down a little bit further. And I think that's the balancing act that the G7 countries are looking at right now, is the fact that, listen, this war is far from over. At this point in time. However, we have to have a temporal plan in place. And I think that is where we are going for now. But let's see what happens during the day. And then we'll take it from there. All right. But that's me this morning here. Join us today with the CPI, guys. Myself and T will be logging in there and making sure that you guys are streaming with us. That's at 2 o'clock today. That CPI print will be coming out at 2:30. All right. Have a good one. We'll see you guys at the CPI this afternoon via YouTube. All right. See you guys then. Ciao, ciao.